Today, we're going to follow the entire journey of a single stock, right from the moment it's created to its long life out on the open market. This is the bedrock, the fundamental structure that makes everything else work, so let's dive right in.
It's a great question, isn't it? I mean, we hear about stocks being bought and sold every single day, but how does a piece of a company even get into an investor's hands to begin with? That's the story we're going to uncover today.
It all boils down to one thing: a company's ambition. To grow, to innovate, to build bigger and better things, it needs money. It needs capital. And when the money from just selling their products isn't quite enough, a company often looks to the public for that fuel.
And this whole fundraising process, it's split into two totally distinct arenas. First, you have the birthplace, which is exactly what it sounds like. It's where the shares are born. Then you have the marketplace, where those same shares live out the rest of their lives, getting traded back and forth. We call these the primary and secondary markets. And trust me, understanding the difference is the key to everything.
So let's start at the very beginning, in the primary market. Just think of this as the factory floor and the official showroom all in one. It's where brand new, fresh off the line shares are created and offered to the public for the very first time. Let's look at the official definition here. The most important phrase, the one you really want to lock in, is "for the first time." This is a one-way street, you know? The company sells, and that first wave of investors buys. And here's what's crucial. The money from this sale goes directly into the company's bank account.
And the biggest event, the one that gets all the headlines in this primary market, is something you've definitely heard of: the IPO. That stands for Initial Public Offering. It's the big debut, the grand opening for a company's stock.
An IPO is pretty much exactly what it sounds like. A private company decides to go public, offering up pieces of itself, its shares, for sale to absolutely anyone. And this is a massive, massive moment for a company. It's often the single largest injection of cash we'll ever receive to fund its future.
So how does this actually work? It's really pretty straightforward. Step 1, a company's growing, it needs money. Step 2, it creates and offers these new shares in an IPO. Step 3, investors, people like you and me, buy them. And boom! Step 4, the company gets the capital it needs to build that new factory or hire more engineers. Simple as that.
But okay, what happens after the IPO? The company has its money, the first investors have their shares. Is that the end of the story? Not even close. This is where the share begins its next chapter. It's real life, out in what we call the secondary market. Now, this is the market most of us think of when we hear the stock market. The New York Stock Exchange, the NASDAQ, all of that. This is where existing shares are bought and sold. And notice the huge difference. The company that first issued the stock, they are completely out of the picture now.
The best analogy for this is the car market. The primary market is like going to a dealership and buying a brand new car, straight from the manufacturer. The secondary market? Well, that's the gigantic used car market, where car owners are just selling their cars to other buyers. Ford doesn't get a cut when you sell your old Focus to your neighbor, right? Same exact idea here.
So, to sum it up, in the secondary market, the company is not involved. It's all about investor A selling to investor B. This is where all that daily price action happens, where prices go up and down based on news, on demand, on public feeling, and most importantly, it provides that essential function. It gives investors a place to actually buy or sell their shares whenever they want.
So, we've got these two very different markets, the birthplace and the marketplace. But they're not separate worlds. They are two halves of a single, powerful, interconnected system that really makes our economy go round.
And this table just lays it out so clearly. Look at the purpose. Primary market, for the company to raise money. Secondary market, for investors to trade with each other. The participants are different, the transactions are different, even the analogy is different. New car dealership versus used car marketplace. They're built for completely different things, but they are totally dependent on each other.
If you take away just one thing today, please let it be this. The primary market creates the assets, the very things we invest in. But without the secondary market, those investments would be stuck, locked up. The secondary market provides what's called liquidity, which is just a fancy word for the ability to easily turn your shares back into cash. And that promise, that ability to sell later, is what gives investors the confidence to buy in the primary market in the first place. See? One simply cannot function without the other.
And there you have it, the complete journey of a share. We're breaking all of these concepts down one by one in this series, so if you're following along step by step, you can always subscribe to NeuralTarot.
So, now that we know how a share is born and where it gets traded, what's next?
What do you actually do with them, and how do you manage different investments to handle risk?
Well, that leads us perfectly into our next explainer. We're going to get into what a portfolio is and how the absolutely crucial concept of diversification works in the real world. Thanks for watching, and I will see you next time.